Hello, it's Emma Seymour, CFO of Deputy. You are listening to the CFO Thought Leader podcast.
This is episode 1091.
We have to make our way through the macro uncertainty around fear, around sentiment, around inflation, around tariffs, and what does it mean to our business? And we can't be guilty of group speak. We have to be data-driven in taking what is happening externally outside the walls of our company, what is happening to the different customers we serve. So at Zeta, we serve 15 different industry verticals. Not all verticals behave the same in good times or in less good times. So more than ever right now, the finance function has to be right. That we have to be data-driven, not sentiment-driven. And that's hard to do because fear is sentiment. We have to be data-driven in how we guide the business and ultimately how we talk to shareholders. That's really my focus throughout 25.
It was a morning commute, Chris Greiner tells us, that he had made hundreds of times. Living in old Shanghai and working in the city's sleek business district, Greiner's daily drive often stretched well beyond an hour. But one particular day, his driver told him today's trip would be only 30 minutes. Later, Greiner learned the city had repainted the lines that govern the streets. Same bridge, same road, just used differently. That mindset is now shaping Zeta Global's evolving AI strategy. Rather than applying AI for efficiency's sake, Greiner tells us his team follows the real patterns of work, starting with customer behaviors. You'll hear about that and much more on today's episode. Our talk with CFO Chris Greiner begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Returning to CFO Thought Leader is Chris Greiner, CFO of Zeta Global. Chris began his finance career at IBM, where he held roles across Asia and rose to the divisional CFO of its analytics division. He later expanded his leadership scope at Inovalon, forgive me, I'll botch this, I'll redo it. Inovalon, serving as both Chief Product Officer and COO, having now occupied the CFO office at Zeta for the past 5 years. We look forward to finding out how AI is reshaping the company's strategy and customer value proposition. Chris, welcome.
Thank you, Jack. So good to be connecting with you again. It's been a little while.
Yes, it has. And as I mentioned, it's been nearly when you look back on that time, what would you say have been some of the more meaningful milestones for you and your finance team at Zeta?
Well, we made it through COVID. We used that air pocket of time to get the company ready to go public. We then went public in the summer of 2021. Not long after did we experience, I think, the broader macro challenges. Our business uniquely continued to accelerate both in growth and profitability. And we find ourselves now really already through our first long-term model that we provided to investors, which prior to going public, we set an internal goal to get to at least $1 billion in revenue and $200 million in EBITDA and over $100 million in free cash flow. We rolled that out publicly shortly after our IPO. And we've effectively gotten there a year early and now are rolling out our next 4-year long-term model to effectively what took us 16 years to get to our first billion, to get to the next billion in around 4 years.
So, I mean, as you reflect on that journey, on the company's evolution during this time, what stands out to you in terms of how finance may have helped shape or accelerate Zeta's strategy?
Yeah, I'm very fortunate at that. Whether it's our CEO, our president, our business unit leaders, they very much want finance to be that strategic partner. And for us, that means not only just reporting the news, but really more importantly, helping them make the news. And at Zeta, that is the ability to bring in not just financially oriented data, but macro driven data, sales pipeline data, how our customers are spending across different verticals, to give them a sense for, are we gaining share? Where should we put our outlooks? We've been public now for 14 quarters, and for all 14 quarters since being public, we've beaten our guidance and raised our guidance. So we are fortunate in that we do have a very close partnership with the business that wants the finance team to be at the head of their table, assisting them, and not just tactically, but setting the strategic priorities for the company as well.
So you got the mindset there, but I'm wondering, does that organization look any different than it did 5 years ago when you arrived? And if so, how?
I'm a big believer in the role of finance should kind of have the single version of truth for the business. And at Zeta, that means bringing together not just finance and accounting, but also sales operations. And we started that way. I had the good fortune when began to talk to our CEO and founder and members of the management team about joining Zeta. My vision has always been that, finance being that single version of the truth. And that organization has largely stayed the same from when I joined to where we are today.
It's stayed the same. You haven't added headcount. You haven't asked your people to spend their time differently.
We've actually been able to keep headcount flat as we've now, effectively tripled the size of the company. Now, we'll get into the ways in which we've been able to do that. For me, it's less about adding people. We've changed the mix of people on our team. I'm a big believer in that if I could have more data scientists in the finance and accounting function than financial analysts, we'll be a more robust, more advanced company. So we continue to bring in folks that have heavier engineering backgrounds than just maybe pure accounting backgrounds. Don't get me wrong, we have our fair share of CPAs in the company, but we're very, very focused on how do we bring people with a very much of a data science mind to the finance team than just kind of a simple financial analysis or accounting background.
Would those data scientists be part of your FP&A team? And do you think of a FP&A as a team today, or do you see it more of as an integrated group or something? Do you look at it differently than you did?
Within the finance function, it's a defined practice, if you will. We're really trying to create like a consultancy-like approach to financial planning and analysis, and that is where most of our data scientists reside. From a company perspective, you're exactly right. We try to have them fully integrated into each of our business units.
So how do they, report back to you? I mean, how is this organization? Again, that's kind of a delicate thing because you want them to be accepted in these business groups and functional areas. But I report back to Chris, or I report back to the VP of, FP&A, whoever it might be. Tell us something about the culture that allowed you to sort of put that in place.
Look, you nailed it. It all comes down to trust. And you can't have an organization that is seen as a traffic cop, if you will. You have to be an organization that is seen where these financial teams, whether they're the data scientists, the financial planners, the accountants, or even the sales pipeline management team, they are integrated in a way that they are part of the discussion around what are our biggest challenges, what are our biggest opportunities. They're not trying to play gotcha, but they're out there truly as counsel and really creating different simulations and different scenarios that the business team can run to see, if I make this decision, what is the outcome? If I make a different decision, what is the outcome? So they're very much part of a simulation or scenario-based team that is a partner rather than just something that takes team that takes inputs and creates a different output each time.
Because I'm hoping you can get maybe a little more specific for us as we try to understand better how this evolution happens. Yeah. And again, many finance leaders tell us exactly what you've told us. And we're looking to see how this mindset gets adopted and what have you. And I'm wondering if there's a moment, or maybe it can, it's several moments, but here's what we've experienced. Is there a moment you could share, perhaps a turning point, when you felt the finance team had really stepped up and elevated its role? And this is post-IPO. Yeah. Okay, you had the IPO. Clearly, there was a lot of change happening around the IPO. But since the post-IPO on forward, that they really stepped up. Was there a moment? Was there an example And, when you took the team out to dinner, I mean, when we say milestones, people speak in these broad general terms. What does it mean for your finance team?
We stepped up when we stepped out of finance is the short of it. And what that means is that, for a large part of my career, I was a chief product officer at a software company. I ran sales at a software company. It was the COO, head of innovation, which meant that I learned far more about what it meant to run the business than I ever did from the finance chair. And by stepping up, by stepping out, what that meant was a recognition that value is generated for shareholders and customers when you create the very best products and you have the most efficient sales team to sell them. Everything else in the organization should be as small and minimal and efficient as possible. So for us, it was the recognition that we needed to go into each one of the discussions, whether it was my finance team supporting engineering or my finance team supporting marketing and sales, in the question of what do you need to be successful, getting them all of the resources they need to, effectively taking the organization, making it look like a barbell, where the weight of the organization is in engineers and it's in salespeople. Everything else is super slim. So for us, we didn't look like that post-IPO. We looked a little bit different than that. We redistributed resources that were in the middle that might have been devoted towards finance and accounting, legal, HR, other more G&A functions, made them lean, looked to create automations in those areas, which we'll go into. And we used that opportunity to then redistribute where money was invested. And then therefore our finance teams could go in to their engineering counterparts, to their marketing counterparts, to their sales counterparts, and have a much more invested conversation around, I'm going to get you the resources that you need to be successful. Whereas those conversations in the past might have been, I need you to cut to be more efficient. We went the other direction. So when we stepped up, we stepped out of finance.
Was there ever sort of a leap forward with a particular metric because it had sharpened the data behind it, or you knew, that metric 2 years ago, I might not have paid attention to. Now we can, and it means something meaningful to us. Is there such a metric you could share that sort of follows that storyline?
Yeah, look, when we got closer to the business, what it allowed us to do is have a much better understanding of what our customers wanted from Zeta, the value that they received from our products, and what compelled them to spend more and stay longer on our platform. And that sounds obvious, but when you get deeper into that conversation, what it led us down is a path to focus more and more on our customer spend. In our word, we call it scaled customer ARPU, or average revenue per unit. It's been one of the fastest growing parts of our business. And what we discovered in that moment of redistributing where sales and engineering would be was to create more sales opportunities for our quota carriers to sell multiple channels into our customers. A channel in our case is if I'm a CMO, you and I as consumers, we can be reached in so many different places digitally. Zeta's software and artificial intelligence knows what we're most likely to be responsive to on those channels and what type of message we want to be served to be, to buy something from our favorite brands, either a good or a service. So we identified what those opportunities were to scale customer ARPU. And it's been one of the faster growing metrics of our business that was unlocked from this type of insight.
And what is can you share with us, where is things headed there? Is it, are there going to be additional measures that come in behind that? Or where do you see the future for that type of measurement?
So scaled customer ARPU, or how much our largest customers spend with us year over year, has been a metric that we've carried in our first long-term model. The original long-term model was anywhere between 8 and 12% year-over-year growth in customer spend. In our latest long-term model that we just rolled out, we increased that to 12 to 16%. And it was all because of these insights on not only where is their current opportunity, but what is the further unlock to be able to continue to accelerate the customer spend on Zeta's platform.
All right. Well, Chris, we do want to chat with you about AI. And I want to, in our conversations, what we've been finding is that most finance leaders, or many finance leaders, are framing AI through sort of a two-track lens. Internally, as a way to drive productivity and automate different processes, and externally as a means to enhance the customer experience that we've been already talking to you about by embedding intelligence into products and platforms. At Zeta, how are you thinking about these two dimensions? Or maybe you're looking at things differently, but, and please, if you are, say, I don't like that framework. Here's how I think it should be done. Just let us know. How are you thinking about these two dimensions, internal enablement and external differentiation?
Well, I think around generative AI, we're earlier than we think, farther along than we realize. So it's kind of one of those dilemmas. In our case, for the Office of Finance, we really are starting with how our customers are using our generative AI as a guidepost for how then we can use it. Because if we're out there every day trying to help marketers become more efficient and more effective, and we've created automations for them to do that, what it did is we started by following what marketers were doing on our platform. What were their keystrokes on our platform? That then led us to create automations that they didn't need keystrokes. They had an avenue or an agent that got them 90% of the way there. We're now beginning to codify all of the work that our accounting team does, our financial planning and data science teams do, our sales operations team do. And we're letting the tasks that people do every day, in every moment of the day, create what are those automations that are the most heavily used tasks, and we're kind of following where the work is going or following the operations of the company to create those automations. Our customers today are taking a vast amount of data available on the platform, and we're creating buttons that they can press for not only what does this mean, but what is my next best action. Think about Zeta's ledger. Think about Zeta's account planning system, Zeta's sales pipeline data, vast amount of information that a human today has to distill. We're creating those same workflows and avenues where there's a simple button that an analyst, an accountant, a sales pipeline data scientist can press to say, this is what the information is telling me. Here is the next best action.
Is this reflected? And I was just visiting Zeta's site and know that you have a new offering, AI Agent Studio. Is this an example of that? Does it reflect that thinking that you were just sharing?
We're early. It will reflect it. It hasn't yet. Again, we're starting with our customers, but what you would imagine is they would begin to become an internal studio of tasks. We're doing this today outside of finance, whether it's onboarding or client implementations or customer success, creating automations internally. You'll now begin to see those roll out over the course of 25 and into 26, not just for finance and accounting and sales operations, but for HR, for legal, et cetera.
So here's a question we've been asking regularly now. From the CFO seat, how do you evaluate your investments in AI? What are you looking at?
Look, it's a good question. It's a tough question. I think you have to get comfortable with putting more resources towards this and getting kind of with a slightly longer time horizon of benefit than you would ordinarily put forward. So for example, a year and a half ago, we asked ourselves the question, why do we need so many disparate systems, features and point solutions supporting HR and finance systems? Why can't we just have one platform? Now, that was a very clear ROI. We could add up what we were spending on vendors and what we would spend to replace with a single platform. And it was a very compelling value proposition. We made that decision. Today, you have to look at it in terms of not just efficiency, but impact, because making those decisions for the sake of just saving a few dollars on the corners, on the edges, but maybe sacrificing accuracy or controls in a public company setting is the wrong trade to make. So we'll often talk about how quality overrides speed. You want to focus on, the quality of your inputs and your outputs rather than just getting the answer faster. I think in this case, I have to exhibit a much more disciplined view around the timing of when I'm going to see the benefits from creating these automations, the investment it takes to measure the tasks that everybody's doing at every moment of the day, and then to send our engineers off to go create those automations. I think that's a longer time horizon, but I do think it'll create a better ROI ultimately as you look call it 12, 18 months out than maybe just 6 months out, what would have been our prior time horizon.
Now, has finance played a sort of an active role? You mentioned language models earlier, played an active role in trying to help the workforce begin leveraging these types of licenses and what have you to allow them to, unlock the potential in their own little area. Each individual, can become a champion in their own way.
Mm-hmm.
Are you part of that discussion? A functional area wants to get, I don't know how many new licenses, and at the same time they want to hire, 20 more people. I don't know, but what would you share with us?
As much as we leverage all of the open source large language models that are out there, the majority of what we're building for our customers are our own developed large language models. So we do have the unique ability to go tap into our own engineering teams, our own data science and data cloud teams, to be able to leverage what they're creating for the benefit of taking all of the vast amount of information that sits inside Zeta's data cloud for the benefit of our customers and how they market, and doing those same types of tasks and orientations for all the information that sits inside Zeta's walls to make better decisions around how we forecast and how we invest. So we can leverage a lot of our own models for that.
What about when it comes to forecasting and planning? Are you leveraging this technology already?
We are very early. It would be disingenuous to say that it's fully built into the systems. What we are doing today is more, call it machine learning. So using patterns that exist with customers that have been with us for, more than 5 years. And customers, so 90% of our revenue is with customers that have been with us over a year on the platform. So we have a vast amount of information on how they spend, when they spend, what drives them to spend more, what drives them to stay stable. We use those patterns and that machine learning, but we're not quite at the place yet where you can, I think we'll get there one day, but type into Zeta's ledger, I want the forecast for customer XYZ, and it gives it to me. I think we'll get there one day, but we're not quite there yet.
Have you had, I'm just curious, when it comes to AI, whether you believe your finance team, enough senior members had come to you with pointed questions regarding the role AI will play in the operations and what have you. Chris decided we should do an offsite and just, have everybody do a reset with us. We're in this new space, and we're going to need some new guidelines or ideas as to what we should be discussing. No, have you done something like that, or is that likely to piggyback on another meeting?
We're early days, and I think it's going to piggyback. We are trying to create incentives for our teams to create different use cases and models. One of the ideas that has come out of this is the ability to measure all of the work that's happening inside Zeta and where are we seeing tasks replicated or redundant tasks. And I think those are the ones that are going to be the lowest hanging fruit for automations and kind of financial agents that sit next to you and help you automate, get it to 80% of an answer and you do the last 20%. That's a significant time savings, but it's also kind of more quality time spent on an issue or a topic or a challenge than just kind of the gathering of data, which for most of my career has been the hardest part. The hardest part's been just getting access to it and assembling it, much less so making a decision off of it. So we're taking a lot of that work now out of the equation.
Have you seen any shifts in how clients budget that you might attribute to the impact of AI in some way? Are your customers looking at the world differently? And is it a reflection of AI, do you believe?
I think we're earlier than we realize, farther along than we think, on this. So
you're going to make the title of the episode that, but
I think it's unfortunately true or fortunately true, whatever you think. So out of our over 500 scaled customers, so those that are spending over 100K with us on a trailing 12-month basis, over 120 of them now are using our generative products. So I make the point around being early. These are products that we launched in the market about a year ago. We're on our third evolution of what those agents are capable of doing. It is one of the faster growing parts of our business. Zeta's revenue for all of last year grew in the high 30s year over year as a percent. The consumption part of our revenue, where our clients are most likely to use generative AI, grew over 40%. So it is a growing contribution to the business, their use of generative AI, but we're in the very early innings.
And I've sort of asked this question a little earlier, but I'm going to ask you again, because I know in the past we've spoken about building trust and enabling teams. And I'm wondering, how has your internal teams from sales to finance been adapting to sort of AI related workflows? Is it the same sort of building of trust and enabling teams? Do they have any different kind of marching orders?
No specific different marching orders. I think for us, it's most present within our data cloud organization. So when I go on the road with investors, one of the things that we try to do differently, at least that I've done in past prior company public CFO roles, is we bring the business with us. So in the past, it might be your head of IR and your CFO, maybe occasionally your CEO, or you kind of special feature somebody if you have an investor day. For us, we bring our product with us everywhere we go. So it's a chance for my finance team to see in front of investors and for the investor to see how Zeta's customers are interacting with our platform, and in particular, our generative products every day. I think it's a unique thing that we bring to the Office of Finance. We are big believers in doing more showing than telling. And for us, there's no better way than to put the platform right in front of our investors, the same way we would with the customer in the very first meeting with a prospect.
So I want to just have you reflect a little on the CFO role. And again, it seems like you've had a number of different lives at Zeta already, given the fact you arrived. There's the IPO, there's the post-IPO. We entered this AI chapter, but there were other chapters, I'm sure. But how has your view of the CFO role evolved during your time there? And how has it shaped the kind of leader you wanted to become? Are you realizing it?
We had, Zeta was private for about 14-ish years prior to going public. And one of the many incredible characteristics of the company is just how much management is retained the same since the earliest days of the company through being public. But that also meant that there were a large number of leaders who had known private company success, but hadn't been in the public markets as much. And obviously one of the reasons that I think the board and the CEO and the president and COO looked at my experience and my background, well, it was all public company experience. So as my role has evolved, it's, kind of earliest days, it was, we're going to be a wartime leader with the other leaders of the company during COVID. We were then going to prepare the company to go public. We were going to go public. Today, one of my favorite things to do is to talk to leadership teams, whether it's in their town halls or overall Zeta meetings, about what are the markets doing? What's important to investors right now? What's important to the sell side analysts, and just educating. When we last spoke, I'm a big believer in doing three things. How do you, as a CFO or any leader, how do you become seamless in your ability to take tactical decisions and also be strategically relevant? In that same conversation, how do you develop yourself and others? And how do you get the team to want to work with you, not just once, twice, but over and over again? You can't leave a wake behind you, because then it kind of makes it difficult to work with the finance team. And that developing self and others, I get so much satisfaction from just being able to sit and talk, answer questions, curiosities that people have. I don't want to ever take for granted that what I'm doing out there every day with investors to help them better understand the company. I want to make sure that the folks that are delivering every day, that make my job so enjoyable and up to this point, so easy to do, is because they're delivering the results that they're delivering. The least I can do is put them into the mind of the investor and the shareholder. So a lot of my time now is spent on educating and making sure that they have a view of what the external markets are thinking about Zeta and our colleagues, and connecting it back to the importance of their job and their contributions.
What is not that you want to be asked this, but during your earnings calls, what is the question that they're not asking related to AI that in some way surprises you? You're not going to tell me, are you?
No, it's...
What is it that you think they should be asking? They're all probably looking at the timeline. When are we going to see the benefits? When are we going to see the revenue gen?
No, it's I think they're asking better and better questions. They're asking all of the right questions. In fact, just last quarter, when we announced that our year end and the advent of our next long-term model, one of the new data points we provided was one of the ones I just shared with you, was out of our 527 scaled customers, 126 were already starting to use the platform. We talked about its contribution towards our overall consumption growth. We talked about how fast adoption is growing over the last couple of quarters. So I think those are the right questions to ask. We're in the process of working with another research analyst who's considering launching on the company. And one of the things that I've been most impressed by him and his team is they really, put the emphasis on show me how your AI capability, because it's very easy to express you've got AI somewhere in your platform, but how is it being used? And for us, The easiest thing is to pull up the platform. We do demos, as I mentioned, with investors. We do virtual demos, usually 2, 3, 4, 5 a quarter, where we actually show the real use cases our customers are doing every single day in the platform. And whether it's helping them take a vast amount of data and understand what it means and what the next best step is, building better audiences that are more relevant to their brand, and then ultimately being able to fully converse with the platform. So if you're a very large home improvement company and you're looking to do a multicultural email campaign, instead of you as a marketer having to create that from zero, you're now 90% of the way there just by typing in the intent of what you have inside our platform. So we try to make those very obvious with investors. I think those are the right questions for investors to be asking right now is to show me rather than just tell me.
Okay. So what's something you hope your finance team at Zeta takes away from the last few years as they step into this new path that we've been talking about, the AI path? What is it that you hope they take away? What can they will be most valuable to them in this new area?
You know, the more of our own champagne that we drink, the better. And I think as much as we talk externally about the usage of our generative AI capabilities, how are we able to outpace that internally with how we're using it ourselves? And, you know, we led with the customer first. We're now, you know, more in, you know, kind of now having to mimic that internally with how our customers, and that's going to be a journey we live on. But I think ultimately, can we vastly outpace our own customers' use of AI?
You might recall last interview we did, I asked you for what's known as a finance strategic moment. And we're looking for a story. And I'm being pushing back on finance leaders now more than ever because we want real stories that people can relate to.
Sure. Yeah, no, for one very quickly when you brought up Asia. So for my 3 years in Asia, two were spent in Tokyo and a year was spent in Shanghai. And if you've been to Shanghai, if you know Shanghai from the pictures and from anything you've seen, old Shanghai was Xintiandi and the new Shanghai is Pudong. And that's where all the beautiful skyscrapers are today and where most of the business is done. But to get from one side, the older side of Shanghai is where I lived with my family, to get to the newer side where I worked in Jinmao Tower every day, it was a nightmarish commute, even though you could, you could on a good day see the building. It was less than a couple miles away. But you had to go over a bridge. And, every day I would have the same driver, an amazing guy that, we would, his English was far better than my Mandarin, but we would work at each other's language back and forth every day. And I remember one day being dropped off at home, and instead of taking roughly an hour to an hour and a half to get to work, he in a very joyful way say, "I'm going to pick you up 30 minutes early tomorrow," which I was struggling and didn't make sense to me. But I trusted him, and he picked me up the next day, and we're kind of weaving through the old streets of Shanghai and Xintiandi before we get on the bridge, and we start like cruising. And this is at the time, 2008, when the Olympics were going on in Beijing, and they were experimenting with different traffic patterns, etc. And as much as I was trying to ask him, like, I couldn't figure out what was allowing us to get there in half the amount of time that we had for a year, of living there. And he pulls up to the tower and he turns around in this perfect epiphany of English. And he says, Mr. Chris, they repainted the lines. The bridge didn't change, but they went from 4 lanes to 8 lanes just by making them narrower. So this idea of throughput, and I went right into my office and I typed in my computer because I knew I would need it one day to kind of look at a challenge very differently. And even though you might be kind of fixed in your infrastructure, there is most certainly another way through the problem. And in this case, repainting the lines. So I use the story quite a bit. It was a cultural moment. It was but I think it does just express, ingenuity. And it doesn't just have to be in your engineering and your sales teams. How can we as finance help the company continue to repaint the lines?
I'm up to our final question. So not a moment too soon there. We want to know, 3 years from now, when you look back at 2025, what would you hope that you did, or something you see this year, or something that you organized your finance team to chase after? What is it you hope your legacy for 2025 is?
We have to, as a finance function, and I'd be shocked if in the course of your conversations this didn't come up every time, let alone the majority of the time, is we have to make our way through the macro uncertainty around fear, around sentiment, around inflation, around tariffs, and what does it mean to our business? And we can't be guilty of group speak. We have to be data-driven in taking what is happening externally outside the walls of our company, what is happening to the different customers we serve. So at Zeta, we serve 15 different industry verticals. Not all verticals behave the same in good times or in less good times. We have to be able to cut through the noise of what does it mean from our own sales pipeline. Now, we have an unfair advantage. Zeta publishes something called the Zeta Economic Index, which is because we have such a vast amount of information around what you and I as consumers are interested in on the open web and digitally, we get an advanced look at that internally. We see what happens with new movers. We see what happens with people spending time browsing in stores or online, what they're interested in. We have to be able to take all of the macro data that's out there, distill it down to what does it mean for our customers, and then what does it mean for our shareholders. So more than ever right now, the finance function has to be right. And that rightness, if you will, comes from what guide we give the street every 90 days. So I think as we make it through 2025, it has the potential to be choppier than 2024 for sure. But even more reason that we have to be data-driven, not sentiment-driven. And that's hard to do because fear is sentiment. We have to be data-driven and help we guide the business and ultimately how we talk to shareholders. That's really my focus throughout 25.
Chris Greiner, thank you for joining us on CFO Thought Leader.
Thank you, Jack.